And it is Nancy's turn to do our deep dive into the E of ESG, environmental. So we're really excited to hear her presentation today. And we want this to be, interactive, engaging. So if you have questions as she's going through this, please either put them in the chat and I'll ask, or unmute yourself and ask yourself. So, and Nancy is with Brighter Investing. And so we're excited to have you here, and I'll let you take it away.
Thank you very much. I'm really excited to be here. I asked before a number of you got on who had come to my talk in November of last year when I did a whole intro to ESG, and today we're going to be focusing on just the E. We can't go that deep in the amount of time that we have, but I am going to cover a couple of the general concepts about ESG and why it's important for commercial property managers. Just really quickly, Nancy Sagar, I'm the co-founder of Brighter Investing, where we and our clients are 100% focused on sustainable and impact investing. Our clients are families and nonprofits and foundations. And I've been working with Livable Buckhead on educational programs across a number of areas, and sustainability, obviously, which, as the great Ray Anderson said over 20 years ago, it literally pays for itself. So, let's see here. I don't think any of you were here last year, but we talked about, and we will talk about today, the business value of these sustainability practices for you in your career, for your tenants, and for your company. And we use an ESG framework for this. ESG, for those of you who may not know or remember, stands for environmental, social, and governance. These are practices that are associated with sustainability. They are not a proxy for sustainability. There's a lot of confusion and drama going on in the financial and general press today about what ESG means and doesn't mean. I will touch on that a little bit in a few minutes, but for now, the E is all about your environmental impact, and that's what we're going to be diving into. But ESG as a whole is compelling, really, for investors. This is a topic that investors care about because ESG metrics themselves translate into better financial performance for companies. So it reduces the cost of capital, or in other words, like the rates you get on your loans for capital to expand and build your business, greater operational performance, better stock price performance. But I wanted to open this up to all of you, okay? So just jump in, turn off your mics. This will be much more fun if we're more interactive. Why do you guys think that environmental impact is important in commercial real estate, particularly in property management, since you guys are all property managers? Why is this important? And there are no wrong answers. First person who volunteers to speak wins.
I'll say something.
Okay.
This is Jennifer. I'm at Resurgence. I know from like a leasing perspective, like just this year alone, we've gotten a ton of questions from prospect tenants on just what we do as a building. And I'm constantly filling out surveys and questionnaires. So I feel like from a property management perspective, we have to think about what we can do to be the building that can accommodate these prospect tenants.
That is exactly what we talked about last year. People were starting to hear a lot of that, so it sounds like it might have picked up. Anyone else experiencing that? Or have other thoughts on environmental impact in your business? Okay, well, thank you, Jennifer, for volunteering that. I will. I was reading CFO magazine earlier this month, and they misquoted this. They said 39% of all emissions come from commercial buildings, which is not true, because when I clicked through and looked at the site, at the source, it's 39% from, the built environment, which is a little bit different than just commercial buildings, but still, it's proof that you can adjust, you can lie with statistics. But in any event, we know that buildings are a major source of emissions. I don't think that's a surprise to anyone. And, whatever that figure is, we have to realize that companies in all sectors right now are taking us to a 2.9 degree world. That is the most recent update from the MSCI Net Zero Tracker. 2.9 degrees, the world's publicly traded companies. And that is not a figure that anyone should be pleased with. When we take a look at how many companies are actually aligned to a 2-degree rise, we've got 43% of companies are on track, 57% are not. And keeping us at 1.5 degrees to limit the worst impacts of the climate crisis, 90% are not on track for 1.5 degrees. So, that just tells us that nobody can rest on any laurels. We have a lot of work to do as a society. This is a look actually at the sort of breakdown in the progress by sector. Lots of green on this. Green is good in that the darker green is keeping us to 1.5 or less. 1.5 to 2 is this middle green, and then we've got the reds, which are between 2 and 3, and then above, up over 3. So here is real estate, which is where you guys all fall. That's the broad sector. And CFO Magazine was actually talking about how commercial real estate and commercial property is really a leader within this sector. And it's for exactly what Jennifer just said, because your tenants, your prospective tenants, are demanding more from your buildings. And so you guys have really been, driving the rest of this industry and leading, across, lots of, more intense, more carbon intensive industries. You're in this, the sort of this best quartile here. But really what I want to emphasize about this concept of ESG and your environmental performance, there are the misrepresentations in the media about what ESG really, what it means. It is not the impact that your business practices have on the environment. When I don't want you to think about ESG as a score. They are metrics, and the scores are something that investors use in investment analysis. And what they are trying to do is to reduce risk in their portfolios. So really what they want to do is avoid laggards in all of those industries, the ones that are most likely to take a big hit if, say, there's an extreme weather event. That's just one example. They don't want their investments to suffer. So this is ESG is all about managing risk. So a score is really kind of meaningless for you. I want you to think about metrics. And we could talk about that forever, but we're not going to, because that's a very negative way to look at it. But this is a really important opportunity as again, Jennifer, since she spoke up, I'm going to keep quoting her. It's a really important opportunity for occupancy, revenue, and profitability. So this slide is straight out of last year's presentation. It's from Transwestern's ESG section of their website. They noted that the data says that good sustainable practices in a building can lead to 11% greater net operating income and 6.2% greater occupancy. These buildings are in demand, and those sustainability practices get transferred to the tenants and the metrics that they may be reporting, whether they're publicly traded or whether they are a B corporation or whether they just find it very important and need to report this data out and track it internally. They, the energy provided by that building is going to determine how much energy in the energy mix that they have to report on. So that is that's one of the many reasons that they'll be asking about that when they're looking at a new building to call home. So let's take a look at the major themes that fall under this E. First, there are the drivers of climate change. So we've got, as concepts, carbon emissions, the footprint of products, financing environmental impact, which is really more for financial institutions that may be lending, billions of dollars to fossil fuel companies. And then there is climate change vulnerability. Next up, we have the use of natural resources. So how much water is a company using? Biodiversity and land use, not quite so relevant in your industry, and where those raw materials are coming from. Pollution and waste, toxic emissions, packaging waste, electronic waste, and then opportunities. Are you taking advantage of opportunities in using more clean tech, green building, and renewable energy? So, as we look at all of these, I want to open this back up again. You've probably noticed that some of these metrics are more relevant for you than others. Which ones kind of stand out to you as being really important? First one who speaks wins. What looks important to you? What do you care about? What are your tenants asking for? We all need a sugar injection?
I think so. Or maybe what you're already doing, because I know some of you do already have these questions being asked.
Yes. Okay. So one more shot. Anyone? Okay. So I will jump in here and volunteer some answers. So we have obviously carbon emissions, because buildings give off a lot of emissions. Water use is a big one. Green building, obviously. Renewable energy, and they do talk about carbon footprint because of the materials that are included in buildings, because they are emitting greenhouse gases as well. So this introduces a big important term, and that is materiality. So what's important for a specific industry is going to be different from what's important in another industry, because obviously different industries are doing different things. So packaging waste isn't something that your firms kind of need to worry about. You're not packaging things and like, say, Coke. Okay, so that's going to be a huge issue for Coke, but not for you. Electronic waste, that's another one that isn't considered material for you. But does that mean that we can just ignore something like electronic waste? Can everyone in the world, just because it's not considered material to them, just toss out all of their batteries and their old computers and not care where they go? Okay, so I'll volunteer and I'll say no, because we all have a long way to go. We saw that slide earlier about the world's public companies taking us to 2.9 degrees. So it doesn't mean that we can ignore these things. And it also doesn't suggest that these aren't things that a building property manager should not care about, because your tenants may. Any comments on that? Okay. So one of the things that you can do is to go to this website. So it's materiality.sasb.org, SASB. You can see it up here in this corner. This is so a whole bunch of the accounting sort of platforms, practices, they have merged together, trying to create more tighter standards for providing sustainability data on financial reports and standardizing it. But this particular website, SASB merged with like 3 other organizations. It is great because you can go and you can enter your industry and sub-industry and take a look, and you'll see what's considered material. And then you can download information about what data points are relevant. And then you can do that then for like a big tenant that might be interested in one of your properties. And that's valuable because you can see what's important to them might be different than what's important to you when you are reporting that data out, say, to investors who are just using it to evaluate risk. So let's talk about some of those metrics. What I've done here is there is I don't know if you've seen actually, let me show you this. Has anyone seen this logo, this B certified logo, say on, products? My cereal is B certified, which is fantastic. So Denise, I don't know if the cereal you're munching on is, but B corporations, this has been a big movement over the last 20 years. We've got a group in Georgia that is really pushing this. This is a process that any company can go through to validate your impact on the environment, on social issues, transparency, accountability. It is a very comprehensive process to get certified, but it's really important for a lot of reasons. And one of them is financial performance. Another one is talent acquisition and retention. These are companies that are doing things the right way and they want to demonstrate that. It creates product leadership. It can lead to higher, the ability to price your products higher, lots and lots of benefits. But I decided to show you some of the metrics from the B certification questionnaire with the points available for a property management firm that does not own any of its own buildings, just so you can get a sense of what some of these metrics are. So to give you context, you get B certified if you can get 80 points out of 200. And for a property management firm, 79 points fall within this environmental impact area. So it just kind of shows you, if you're doing really well in this area, that can get you most of the way there. If you're not, you're probably not going to get B certified. So let's take a look at a couple of these metrics. And Livable Buckhead folks, I would love for you to jump in. And actually, Sharon as well, for any of the programs that you run that can help on some of these metrics. These are the kinds of things that you would want to be looking at if you're trying to sort of talk to your firm about improving your company's performance on the buildings that you manage and the buildings across the portfolio. So here are LEED certifications and Energy Star, et cetera. Obviously, the percent of projects that are LEED certified is the big driver here, but we also have Energy Star, we have MEET architecture, and Living Building Challenge. Those are big drivers in this certification, which is the biggest category for environmental performance. Does anyone want to weigh in on any of that?
I was just going to mention, we have worked with several buildings before. I know with the surveying on the LEED certification, we have provided information and for the surveying questions. And so there are several of our programs like the transit benefits and other things like that help to meet those needs. So.
Yeah, Nancy, this is Michelle from Livable Buckhead. One of the factors for B Corp and also LEED is the waste practices at these properties. So that's another, you asked about our programming, that's another place where we can be of assistance with our Buckhead recycling program. We help you guys get the best waste practices in place and educate your tenants on recycling and how to go about it the right way. So that definitely fits within this category.
Yeah, so it's just going to jump forward on the, let's see, on the next one. I think that's coming up. Nope. Waste and recycling and all of that is in a slide coming up here. But here we have air and climate. And so lots of points available on this, but carbon intensity is an important concept. This is the amount of emissions that you're generating per dollar of revenue. So, what's the cost to the world for the money that you're earning? It's sort of like this concept of externality. You are pushing out these emissions in order to earn $1. So this is a data point where you can really compare companies and industries, those that are very carbon intensive and those that are less so. There are lots of details here. I'm trying to see carbon emissions from transportation. So that was something that Michelle, you just mentioned. Obviously, EVs, Sharon, we want everyone to have plenty of EV charging stations because everyone's going to want an EV as soon as we're eligible for these new incentives. We talked about those last year, and finally we've got them. But also mileage reduction. And here's some renewable energy. I mean, there is renewable energy baked into literally every statistic in here. So the more pure renewable energy you are using, the better. And their offsets are in here. Well, here we go. Percent of emissions that are offset, you can see is, very small, because they're not rewarding you for emitting and then offsetting, because we need to reduce those emissions in the first place. The world can't support all of the emissions that we're generating. I will quickly move on. The next category is land and life. Here are a lot of the waste issues. So, and some of them are related to the product or the materials. This might be, say, if you have plastic furniture outside in a park-like setting, that might fall within this category. But overall, hazardous waste disposal is one of them. What are you recycling and reclaiming? What kinds of materials are you using to create, say, the things that you provide in public spaces? Any comments on that? I know I'm just throwing so much at you. Here is material and energy use. sick building syndrome. Are you monitoring for that? Are you monitoring energy use? Are you monitoring water use? And I'm going to give you an example of how this flows through to a tenant. We are a tenant in a really awesome building right around the corner from where I live. And our B certification score suffers because we can't measure the water use that we provide. We can't measure the amount of energy that we produce when we're in that facility. You know, we can only extrapolate it down, and it's fairly complicated because we are very, very conscious, because this is important to our company. We founded our company to fight the climate crisis and other systemic issues that we face, complicated systemic issues, to use, you know, a market-based solution to solve them. It's, you know, taking money from laggards and pushing them into solutions. That's, you know, how we drive change. And so our practices at our company are very low impact. You know, our score would be very high, except that, you know, we don't have the ability to report on some of these things at our building. And our building doesn't do a lot of things that we would want them to do. And we've worked with them, which actually gives us some points. Have you worked with your building to try to implement recycling programs or to, you know, create more energy efficiency programs? So I can check those boxes, but still their use of energy flows through to us. And so I don't like that. And then when they're trying to raise our rent, I like that even less, and I want to move. Okay. Let's see. This is, where am I here? Materials and energy use. We're starting to drop now in the number of points. Facility improvements with landlord. There's one of the things I just mentioned, but, and here's water. And what's odd is that for property managers, for some reason, water usage is a much smaller number than it is for property owners. And that is perhaps, you know, a function of, well, when you own the building, you have more control over the water use versus, you know, if you are just managing the property. So this is very low for the property management firm, but it could be very large for your tenants. So in total, that's almost 80 points. Oh, and this is the last one. This is kind of cool because, you know, LEED certification, the percentage of staff, that's worth a point, and these other two, but that is kind of a fly through lots and lots of metrics. And it kind of is designed to overwhelm you. But the key point here is that, you know, Livable Buckhead asks me to do these presentations because they have so many fantastic programs to help you implement these kinds of practices and touch lots and lots of those metrics. So you don't need to be an expert yourself, because then we'd be building all this expertise among you. You know, we want all of you to have a good, you know, foundation on these topics, to be able to talk about them confidently. And that's where, you know, the folks at Livable Buckhead, you know, are doing this day in and day out to help you. And so you can really lean on them and, you know, use their programs and, you know, ask them questions, send me questions, because, you know, we are closer to those answers and can get them to you. So really, this is great set of resources for you, and they do a tremendous job. And I just love giving talks for them. So yay, that was a look at the E. So I
want to open the floor. We have a few minutes left. So people, if anyone has questions or something specific that you've been asked that you might not have, maybe you didn't have an answer to or didn't know, and just wanted to open the floor and see if there was any comments or questions from property managers.
If anyone's still awake. If you guys had jumped in, I would have spent a lot less time on those metrics slides. You did that to yourselves.
Anyone?
What? Okay, so what are you guys taking away from this? What's the kind of the most important thing you are walking away with after seeing this material?
There's still a lot more we can probably do at our building.
That's great to hear.
Thank you. Yes. There is no mark for perfection. Even if you are a leader in your industry, we still need to improve every year.
Can I ask a question to the group? This is Michelle again from Livable Buckhead. What of the metrics and issues that Nancy covered feels like the most realistic or tangible thing that you could do and you could implement at your building, or you're looking to implement at your building, whether that be from more EV infrastructure, bettering the air quality, or any of the things that she discussed? What feels like something that you're trying to do, or feels like the most tangible thing that you could do?
There's a lot of things that you might be able to do. Expanding the recycling programs, having electronic recycling all the time versus, once or twice a year, battery recycling and things of that nature. It's really easy to implement. And then I think almost everybody's got EV chargers now. I mean, a lot of this stuff is, we have done the bulk of it. We're all, putting our information into Energy Star. So we're all monitoring, all that usage and looking at new ways to reduce our energy. Composting, if you've got enough tenants to add a composting program, especially if you have a lot of restaurants, that's certainly something that can easily be added to the existing programs that we have. It just tells us we have to keep looking at new innovation, new ways to do even better.
Yeah, that is a great summary, Rebecca. And I want to throw this out there. We talked about this last year. Don't wait until your tenants are begging for something, because if they're asking for it and someone else has it, they often don't ask until maybe it's a little too late. And this is a marketing tool for you. And if it is something that's easy to implement and important, that is one of the things on the revenue side that you can really use to differentiate your building. So don't forget that, there's money in composting.
Right.
So, and if anyone is working on, what could be your goals next year, we'd love to sit down with you individually and talk through what those programs are that we can help meet your goals, I guess I should say. So it is 1:01. So I want to let everyone go and not creep into the rest of your day. So we appreciate you being on with us today, Nancy. And we did record, so we will be sending this out to the rest of the property managers who were not able to be on today. And we will be seeing you. Our next meeting will be in November. And so we'll be looking at the social aspect of ESG. So look for Nancy next time. And so I hope everyone has a great rest of your day, and always shoot us an email if you have any questions.